Welcome to the Mike the Money Coach Show, where we talk about tax tips, money making techniques, retirement planning, and more. And here is our host, Mike Velarde, the Money Coach.
Welcome to today's show. Now, today's going to be a follow-up show of the show we did last week. Last week, we did the number one trading technique of one of my favorite traders, W.D. Gann, right? And we're going to talk a little about this book he wrote, The New Stock Trend Detector, how we took $3,000 and made it into $1 million trading just one stock. Now, if you remember from last week, we talked about buying the highs. And in order to be successful in anything, what you need, number one, is a trading plan. Okay, and yes, last week, just to recap, we went through buying the highest high of a stock or a commodity that's trading within a range, and when it pops up above the range, that's the best time to buy. Now, both Gann and Livermore made a fortune doing this, and they wrote numerous books about Jesse Livermore. This one written by Mr. Smitten. This is another book written by Jesse Livermore. This is another one about Jesse Livermore, okay? And I just want to read you what he said about new highs out of this book real quick. And this is, if you can see him, this is a picture of him and what he was like. He died in the 1940s, made $1 million in the crash of 1907. That started him out. Here's what he said. New highs were always good news for Jesse Livermore. To him, it meant that the stock had pushed through the overhead resistance and was very likely to advance. Livermore was not a chartist. He calculated everything from a numerical base. So when he saw that breakout, he bought. And that's exactly what we talked about last week, and I'm going to emphasize it again a little this week. Okay? And we're going to go on with the next section of the show. We're going to go to charts, and I'm going to show you the pictures of all the times we go to new highs and how the advance is tremendous, and it's the safest place to make money, because once you know that everybody wants to buy it, you don't have to worry about your stock going down because everybody wants it. So that makes the most sense. But of course, it's hard for us to consider when we think about it. I mean, we're taught, right? You buy low, you sell high, you buy low, you sell high. And in reality, what we want to do is we want to buy above the highest highs, because that's where the resistance is. And when we get through that, now everybody's going to want it. So number one rule, trading in stocks. And again, we're going to use the best techniques of two of the best traders who ever traded the markets. They both lived 100 years ago, but the rules they laid out still to today work. And that's the most important thing. All right, so we're going to need a trading plan, and the number one thing to consider in the trading plan is where to buy it, what's the best probability for you to make money, and then secondly is where you're going to put your stop, what are you going to risk in the event that you're wrong? Because of course, in trading, we could always be wrong. So we can never risk all of our capital. Because when that happens, and I don't care who you are, even the great Jesse Livermore himself, okay? Livermore got into a point in his career, and I just want to stress this because this is a guy who made hundreds of millions of dollars. I mean, he became a millionaire in 1907. In the 30s, he made millions, lost millions, made millions, lost millions, but he always made more than he lost. And then this happened to him. Livermore now needed money to get back to his old position, and he needed it fast. He then made another mistake. He broke another rule, and that's why we're going to go through some of the most important rules. But the number one rule that you need to remember is you need to preserve your capital, because if you don't have money, you can't trade and you can't do anything. So number one rule is preserve the capital. Number two rule, right, is to make sure you buy at the point where it's going to give you the highest probability to win, because you want to put the odds in your favor. All right, so he wanted the market to pay back for his losses. He went back into the market with a vengeance, but his trading ability was shot. He was an emotional wreck, because when you're losing money, you will become an emotional wreck. I know personally it happened to me, 20 years ago. And it's a terrible thing because you don't think clearly, All you can think about is you can't lose, you can't lose, you can't lose. And all the rules go out the window, emotion comes into play, and you make emotional decisions instead of decisions that are based on charts, based on sound judgment. But his trading ability was shot. He was an emotional wreck. Instead of returning to the market, he should have gone away to his emotional balance check. But convinced he was the great trader everybody thought he was, he plunged back into the market, losing the last of his stake. He then operated on credit. He went into debt to the people who backed him. He finally tallied it up months later. He owed his brokers and creditors well over $1 million. He had lost his $3 million and another $1 million to boot. Some operator, he thought to himself, some bad operator. It was an emotionally crippled, despondent Jesse Livermore that stood on the train track waiting for the train to Chicago. He was down again to rock bottom. And the reason I read you that is because even somebody who was so successful allowed his personal vanity, that success went to his head. He thought, I'm just great. I don't need the rules anymore. I can just make money. When you violate the rules, when you violate your capital rules, ultimately you will fail. That's why, again, the number one rule, preserve your capital. So once we have a trading plan in place, I went through the number one buying technique is to buy new highs. And again, all these things that I'm telling you now in this segment, in the next segment, I'm going to show you on the charts, and we're going to use both commodities and we're going to use stocks, so you can see how time and time again, whether it be from the 1930s or 2022, that the same patterns repeat. And if you have a plan to make money using those strategies, you will be successful. But the reason I read you that cautionary tale about Jesse Livermore, who ended up committing suicide, this is one of the most successful stock traders who ever lived, commodity traders who ever lived, ultimately took his own life in a cloakroom at a restaurant. That's a very sad tale. And everybody wants to make money, but when we make money, we got to be able to be disciplined. We can't get too emotional, and we certainly can't get a big head about it, because no matter who you are, you could fall, you could stumble, and you can fail. So that's why I'm here to teach you the rules and the techniques for success. So we spoke about the number one rule, the way that most of these people made money, Jesse and W.D. Gann and other traders, and that's breaking out above the channel. The next one is buying old bottoms or buying support areas. When a market comes down to a certain price, then that's when we want to buy it, okay? Next one, and this is a very popular rule. It's called the 50% rule, and this worked tremendously for the S&P. Remember when the S&P ran up from 1994, the fall of 1994, all the way to March of 2001? It hit a high of 1,600. Right? In 2004, it came back to exactly 800, exactly 50% of its high value. And we're going to be showing this on the charts when we return from this commercial break. We'll see you in a couple of minutes.
This message was brought to you by Warburg Equities and the Cricken Law Trust.
Hi, I'm Adam, an associate with the Cricken Law Trust. We're here to help you process money owed to you through the CARES Act. If your business employed 10 or more people and maintained payroll taxes through the 2021 shutdown, the Cricken Law Trust can help you get your money back. This money is yours, but if you don't apply now, you might lose this opportunity and it'll be gone forever. Contact us now. Go to www.my123erc.com. Now that's www.my123erc.com.
Tax alert! Tax alert!
I was receiving letter after letter from the IRS.
I got Mike Velarde on the phone and I said, Mike, I got a problem.
He took the pressure off my shoulders.
He just made me feel like I had Superman on my side.
Trust me, he's the man to go to.
IRS problems? I'm Mike Velarde, enrolled agent. I can help. My company, Winning Tax Solutions, has always gotten our clients the best possible results. Visit us at winningtaxsolutions.com or call us today.
You're watching Mike the Money Coach, where we talk about tax tips, money making techniques, retirement planning, and more. Now, welcome back to the show.
Welcome back to the show. All right, so we're going to put some charts up for you to see, and we're going to show you how these rules work. All right, we're going to show you how they work in both commodities, and we're going to show you how they work in stocks. Now, I was talking about, before we left for the break, the S&P 500. In the 1990s, 1994, the fall of 1994, the S&P started to go to new highs. It started to go higher. 1995, it really took off. 96, 97, 98, 99, until we got to March of 2000. And that's when it peaked at 1,600, right? After that 1,600 peak, we went into a downturn, a little bit of a recession, right? The stock market went into a bear market. 50% retracement. That is one of the fundamental rules that we want to see here. Now, let's talk about using the simple rules that we had, right, of buying breakouts, buying support, selling resistance. We go to this chart over here, right? Now, this was one of the ones that Gann used, and what he did was he put certain markers, certain points, and I don't know, I'm going to make it clear so you could, let me move over so you can see the chart clearly. You see when it broke above that low support level, it continued to go down. And it went down the entire amount, you can measure it, of the old range. So from that left low to the high, you measure it, and when it broke, you can measure it again, and that becomes your buying point. That becomes your support area. All right, so we're gonna see if it makes a little more sense with the with me using the pointer over here. But that's one thing we want to be able to do is measure the range. When we measure the range, right, the top to the bottom, we'll be able to see exactly where we could get in and get out. Because mathematics is an exact science, right? Yeah, let's go back to a commercial break.
This message was brought to you by Warburg Equities and the Cricken Law Trust.
Hi, I'm Adam, an associate with the Cricken Law Trust. We're here to help you process money owed to you through the CARES Act. If your business employed 10 or more people and maintained payroll taxes through the 2021 shutdown, the Cricken Law Trust can help you get your money back. This money is yours, but if you don't apply now, you might lose this opportunity and it'll be gone forever. Contact us now. Go to www.my123erc.com. Now that's www.my123erc.com.
Tax alert! Tax alert!
I was receiving letter after letter from the IRS.
I got Mike Velarde on the phone and I said, Mike, I got a problem.
He took the pressure off my shoulders.
He just made me feel like I had Superman on my side.
Trust me, he's the man to go to.
IRS problems? I'm Mike Velarde, enrolled agent. I can help. My company, Winning Tax Solutions, has always gotten our clients the best possible results. Visit us at winningtaxsolutions.com or call us today.
You're watching Mike the Money Coach, where we talk about tax tips, money making techniques, retirement planning, and more. Now, welcome back to the show.
Welcome back to the show. As before the break, I was talking about the 50% retracement. Now, we were talking about the S&P 500. In the fall of 1994, the market started to move upwards. 95 was a record year. It kept going up, up, and up. 96, 97, 98, 99. It looked like the market wasn't going to stop. Well, finally, in March of 2001, it hit 1,600. When it hit that number, it then retreated, and we went into a bear market for 3 years. In 2004, we hit a low of exactly half of the 1,600, which was 800. Okay, and then you could see from this chart, which is not the greatest chart, but you could see over here where once it got above that double peak, in 2008, right, we had another low of 800. right? And then we continued to rally past the 1600 until we hit 3200, which was double the old high. So mathematics is an exact science. So if we go back in history, we can put together techniques that'll work for the future because they worked in the past. So this particular chart, if you look at it closely, you see the double peaks. That's the twin $1,600 point tops in the S&P. The first one being in March of 2001, and then the other one being back in 2007, and then we had the sell-off in 2008 where we hit 800 again, and then we rallied, except this time we got up to 1600 and we went past it. And when we blew past it, we continued to go up until we hit some resistance at 3200, then we pulled back and we went up to 4800. Okay, so you can see mathematics is an exact science. And what we're going to do now is we're going to look at some other charts where these same techniques, these same rules will apply and will work. So I want to go back and show you what W.D. Gann did and how he took $3,000, right, and made it into $1 million. Trading one stock, Chrysler, starting in the 1920s, I think it was 27, and before 1940, he made himself $1 million just trading in this one stock. All right, so you can see here I have some buys and sells on the chart. Now again, we see when it comes off the low, it touches right over there. You see right here? Yep, right there. When it breaks that high that was over here, and goes above it, it rallies all the way up. That is the safest buy point to buy any stock or any commodity. Why? At this point, you know everybody wants it. And what we can do is we take the range, right? In this particular stock, it was a range of $10. And we add $10 to the new high, and that gives us a sell point, and you see that sell point right here. Now, we would have sold initially, but once it got through it, we would have bought it again, added the $12, we would have sold right at the top, right there, and then it came down and retested. If you notice the retest over here, right, the retest was another buy point. It was an old top, right? So that is support. So we buy it at support, and again, when it rallies, we sell. And we go in and out of these particular points, and only these particular points. You don't want to be emotionally buying and selling in the stock market or the commodity market. You know, we all do it. I mean, I've done it many, many times. And one time my son calls me up and says, Dad, hey, buy Heineken, you know. It looks like it'll be good. I said, all right, I buy Heineken. Well, guess what? For months I sat on a loss. Now it's a profit and I'm making money with it. But that's not the point. The point is I broke the rules. And when you break the rules, you can't expect success. Because you're betting on luck and hope. You might as well go buy a lottery ticket. But when you use mathematics, when you use proven rules, and that's why what I want to show you on these shows is what did the best people who ever traded the stock market, what did they do, and what are their top techniques? And that's what we're seeing here. And you can see by using mathematics, by measuring the range, right? By buying the breakouts, by using stop loss orders, by managing the trades, getting in and out right, we can project where it's going to go based on the size of the range. And that's what I do. So now we're going to come back and I'm going to show you, instead of using the charts from the 1920s, right? We'll go to one more Gann chart real quick. Let's go to one more Gann chart, what he did with Chrysler here. This is where you got the big breakout, okay? And you can see here once we hit that top, right? That top and went above it, boom, it skyrocketed. That's where the money is. Those are the trades we want to look for. When we come back, we're going to look at some of the markets, today's markets, so you can duplicate what he did back in the 30s today in today's economy. So we'll be back in a few minutes.
This message was brought to you by Warburg Equities and the Cricken Law Trust.
Hi, I'm Adam, an associate with the Cricken Law Trust. We're here to help you process money owed to you through the CARES Act. If your business employed 10 or more people and maintained payroll taxes through the 2021 shutdown, the Cricken Law Trust can help you get your money back. This money is yours, but if you don't apply now, you might lose this opportunity and it'll be gone forever. Contact us now. Go to www.my123erc.com. Now that's www.my123erc.com.
Text alert! Text alert!
I was receiving letter after letter from the IRS.
I got Mike Velarde on the phone and I said, Mike, I got a problem.
He took the pressure off my shoulders.
He just made me feel like I had Superman on my side.
Trust me, he's the man to go to.
IRS problems? I'm Mike Velarde, enrolled agent. I can help. My company, Winning Tax Solutions, has always gotten our clients the best possible results. Visit us at winningtaxsolutions.com or call us today.
You're watching Mike the Money Coach, where we talk about tax tips, money-making techniques, retirement planning, and more. Now, welcome back to the show.
Welcome back. All right, so now let's talk about some current markets, all right? We are in a inflationary economy, crude oil market. Now, this is a long-term chart of the crude oil market. We're going to start with this, where you can see the peaks and the valleys, right? Remember when it went down to -40 over here, a little bit, a couple of years ago. Then it came back, and now we've been in a bull market ever since. And if we take a look at a shorter-term chart, the 6-month chart, which we're going to put up next, you're going to see there's a lot of support and resistance, but it's in a range, right? And we could buy those bottoms, sell those tops, make sure we use stops to protect ourselves. Because if you notice on this chart, right, you look over here, you look at those peaks and the valleys, you can see, especially over here, if you don't have a stop in place, you can lose a lot of money. There were people who were getting out of crude oil at zero, right, or trying to, and because it went to -$40 a barrel, they lost millions of dollars because they didn't have a stop loss in place. They thought if it went to zero, it was over, and it wasn't. It went to -40. And if you're trading the futures market and you're talking about every dollar move is $1,000, you're $40,000 down on each contract. When it goes from zero to -40, you're in a lot of trouble. And people went bankrupt because they were never thinking that a commodity could go below zero, but it happened. And again, that's why we always need to put some sort of protection in place, because protection of your capital is more important than anything else. If you don't have it, you can't trade. If you lose it, you are done. And I'm not the best at always listening to my own advice, because there's been plenty of times where I wouldn't protect as properly as I should, because a lot of times, especially in the commodities market, they're going to intentionally try to run your stops, right? They take you out and then they run the market the other way. That's a common practice. The professionals are always looking to take money from the amateurs, right? So they know where they're placed, they run down, they get it, boom, they run it the other way. But you still have to have a plan that's going to overcome that. And that's why the best plan is to buy when the strength is so much that it's only going in one direction as it's going up. And again, you see from the crude oil market over here, right? You see how it moved straight up from there. And then we did it again. We came off that -$40 and we kept going higher. So let's take a look at the crude oil, but over a 6-month period of time, which is another chart, which should be coming next. And we can see the tops and the bottoms in the range, and we can plan to buy a breakout over the next time it breaks above those highs. That's where I buy. If it breaks below the lows, that's our sell. That's the movement we want. Okay, so let's go to the next chart, which is just a shorter version of crude oil. Now you can see all the tops and the bottoms in here, and as you look at these tops and bottoms, right, these are all support and areas, and it's in the range. And what are we going to look for? We're going to look for eventually this is going to break out one way or the other, either to the top side or to the bottom side, and that's going to be our buy or sell area. In the meantime, we can play off the tops and play off the bottoms, buying the support, selling the resistance, and just keep it in that range, but make sure we use a stop to protect our capital. And let's see how these rules work for modern stocks, right? We're going to look at Tesla first, and then we're going to look at Amazon. These are two stocks that have, gone up tremendously over the years, and we're going to see how the same rules can fit into today's stock market. So let's take a look at Tesla first, okay? Now, look at this. If you look at Tesla, right, this is perfect. Look at how it was in that beautiful range for years. And then look what happened when it broke. When it broke out to the upside, it just went one way, and that was straight up for a couple of years. And now, of course, it retreated, came down, and this is where we apply the 50% rule, right? Where if you're looking to use 50% of the value, you buy it at the 50% rule. You got to have rules. Let's go to Amazon and see what Amazon looks like. Amazon, look at that, the same pattern, right? So the same technique that Jesse Livermore and W.D. Gann used in 1925, right, or 1923, we can use in 2023 and get the same results. You see the same patterns. You see the channel, and then you see the big breakout, and then we start measuring the size of the range to get in or get out, right? And then of course, we're always going to make sure that we have a stop loss in place in case we are wrong. And like Jesse Livermore, who committed suicide in a closet because he lost track of the rules and he lost his discipline. We don't want to be like that. We want to use the techniques to make money, but we got to make sure we stay disciplined and never get cocky. Anyway, I'm Mike the Money Coach. I hope you enjoyed today's show, and we'll be back next week to give you more techniques on how you too can make a lot of money. Thank you for watching.
You've been watching the Mike the Money Coach show, where we talk about tax tips, money-making techniques, retirement planning, and many more. Join us again next week with Mike the Money Coach.